Good evening, everyone. Welcome to the 2021 AGM for Queen's University Alternative Asset Fund. My name is Hao Yan, and I will moderate the AGM for today. It is my pleasure to call our AGM to order. We are so glad that you could join us. Before we get started, I will run through a few technical considerations. The AGM should last around 1 hour. If you have any questions regarding the presentation, please submit them through the chat box. Please also note that this webinar is being recorded. This presentation will start with presentation from Board of Quaff, followed by management team debriefing the fund performance 2020. First, let's welcome Mr. Peter Kopstake to kick off this AGM. Peter is the chair of Quaff's executive board and Queen's University Investment Council. He is an executive in residence and faculty member at the Smith School of Business, and currently serves as a corporate director and as an advisor to business, academic, and governmental organizations globally. He continues to be a mentor and advisor to every cohort of Quaff past, present, and future. Now I will hand over to Peter.
Thanks very much, Ian. It's my great honor and pleasure to officially open up our 10th annual general meeting of Quaff. We have this event once a year, but we actually have 2 executive groups every year who take command and charge and lead Quaff forward every year. Before we get into the formal presentations, I did want to say my own personal thanks on behalf of the business school and the board for the great work of the 2 outgoing teams. The most recent outgoing executive, chaired by or set up by Nathaniel Simon, Brenna Cunningham, Sean D'Souza, Nicola Hong, Dina Ding, and Brendan Tushan. I want to thank them. They're just finishing their term as the executive of Quaff. 6 months ago, they took over from the previous team, which had been in place for its 6 months, and that was chaired by, our CEO was Alexander Bond, Gabriel Chu, Aditi Dubey, Sean D'Souza, Nicole Hong, Abby Narayana, and Omer bin Hadir. This is a very time-consuming and challenging role that these people have. They lead a team, which you'll see some of them presenting today, of between 30 and 70 people, depending on the time of year and the programs as they rotate through. We actually have 8. In fact, all of the graduate business programs represented in Quaff now. And it really creates a dynamic and rewarding experience, not only for all of our members as a great learning team, but for me personally, I learned so much by seeing the great diversity of talent that comes to the table and trains each other in each of their disciplines. So thank you all so much for your contributions. I also want to take the opportunity now to just welcome our new team in, headed by Robert Davis. Brenna will continue in her role as CIO. John Irwin, Adam Riyad, and Hoyan Yu, who you just who did the introductions for us. So welcome to the new team. We're going to pass the torch on to you, but only formally after our presentations today. Well done to all of you, and I'll pass the mic back to Hoyan.
Thank you, Peter. Let's hear a few words from Dr. Sean Cleary. Sean is the BMO Professor of Finance at Queen's Smith. He is the Executive Director of the newly established Institute for Sustainable Finance based at Smith, as well as the founder and director of the Master of Finance program. He holds a PhD in finance from University of Toronto, an MBA, and the Institute of Corporate Directors designation. He is a CFA charter holder, a current member of the CFA Society Toronto Advisory Council, a former member of the board of directors for the Toronto CFA Society and the Atlantic Canada CFA Society. It is all yours now, Sean.
Thank you. I goofed already. I was on a panel this afternoon and I said we have to develop a can that you have to put money in when you start talking with the mute. So I talked to someone at a company and they actually do that. But anyways, thanks so much for your kind introduction. It's my pleasure. I appreciate the invitation to speak here tonight. And I kind of broke my remarks up into two categories. First, Quaff, and then I was asked to speak briefly about sustainable finance. So in thinking about Quaff, and I was talking to Peter about this earlier, it was like apparently about a decade ago that he and I were discussing Quaff and reflecting, you know, Peter was telling me his ambitions for it and where he thought this would go. And of course, I was very supportive, is very consistent with my beliefs and with the MFin program. Many of you may not be aware that it was originally targeted just for MBA students. Peter and I talked, and at the time, the MFin program was in its infancy, and the other programs that are now engaged did not even exist. Peter graciously offered to include the MFins in the program, and I think the groups from then on, between Peter and the groups of students themselves, have passed it on, and it's grown. And started with MFin China and then MMA and so on and so forth. I don't want to miss a group. I know there's about 8 groups involved now, but I think this is great. It shows the spirit of what QUAAF was supposed to be. It shows cooperation, and it also shows you know, the ability to capitalize on the strengths that the various programs have. So I'm very encouraged by that development, and I appreciate Peter for starting that initiative, or this concept, if you will. I also, my thoughts in terms of the initial objectives, thinking back to those conversations, are that to achieve those objectives and then some. And those successes, I think, I'll give Peter a thanks, but sorry, Peter, I'm going to have to say that it's more to the hard work and devotion of the many QUAAF teams through the years, and this year is no exception. So you should be very proud of yourself. And you know, that was the ultimate goal, was engaging students in real world experience and running their own ship, so to speak, if you will, and you've done a great job of it. The QUAAF experience, if I'm able to call it that, I think is a great experience. It provides you hands-on, real world experience that I know from, you know, has contributed to the success of many MFin alum, and I can speak to that more than to the other programs. I apologize, but I'm quite sure that's true of all of the programs that have been involved. And I think it's you don't realize just how important it is. It's hard to capture that. So you can think, for example, in the interview process, yes, it looks good on your CV. Yes, it may get you an interview because it looks good on the CV, or because someone interviewing you may actually be curious as to what the heck is this QUAAF all about. But more importantly, I think when you get in those interviews, the ability to be able to speak about deep dives on specific investments or decisions at a portfolio level really sets you apart from the crowd, and much more so than you realize. I also think that it gives you a unique perspective on the courses that you take and the programs you're in, and I've experienced this firsthand in the MFin, because you're thinking questions about what you're doing. So that's an intangible benefit that's also hard to mention. And also, I truly believe that that helps you contribute to the class and group discussions, which contribute to the programs you're in. So I guess the other thing is, one of the things you probably grumble the most about is how much time you have to devote to it. But that's an important career skill, and that's also important life skill, to be able to juggle many things. So whether you probably don't appreciate it at the time, but it is providing valuable experience for you. So very pleased with how QUAAF has developed through the years, and it seems like the development continues to accelerate every year. So I've also been asked to say a few words about sustainable finance. Sorry, I forgot to put my timer on, so if I go over, you'll have to forgive me. But I broke this down. I thought I had about 2 minutes for sustainable finance. So I was reminded of an old saying, and it was, you know, I was going to write you a short note, but I didn't have time, so I wrote you a long letter instead. Because trying to think of 2 minutes to talk about sustainable finance is very difficult. And for those of you who don't know, I'm the director of the Institute for Sustainable Finance. But I was very encouraged to see the team's engagement in ESG considerations into their investment decision process. And that really is following what most companies are doing these days. It's come from a fringe activity to a mainstream activity. So it's great that you're involved in that. That can be reflected. For example, there's something called the UN Principles for Responsible Investment. And in December of this year, there was 3,000 investors, $100 trillion. And in case you don't know, that's over half of the investable assets in the world. So it's no longer fringe activities, very important. So these things have gone mainstream. From a career perspective, there was a Financial Times survey last year that showed over the recent 3-year period that the stewardship teams had doubled over the past 3 years, and other jobs in ESG related areas had quadrupled. And I would suspect that over the last year has been an extreme year of momentum in the sustainable finance field. And with Biden now on board, things have just accelerated the last few months, that those numbers would be much bigger. And also I would stress that that's just the tip of the iceberg, because so many people in mainstream finance are being asked to integrate ESG considerations and sustainable investing considerations in their day-to-day workings. So that's kind of what I had to say on sustainable finance. Sorry, I did have one last thing to add. Last year about this time when COVID hit and all of that, everyone said, okay, that's the end of this momentum. Everyone's going to batten down the hatches, and that will be the end of this momentum for the growth in ESG investing and ESG considerations in sustainable finance. And in fact, I was on a panel this afternoon, we all agreed the exact opposite happened. It increased the momentum. There's more dollars flowing in there. Companies, investments, portfolios that put that lens on their activities, that sustainable finance activities, have done better. And I think it's a reflection of this broader definition of duty to stakeholders. Rather than shareholders, it's a broader definition, and the companies that have dealt with that well have succeeded, and the investments that have dealt with that well have succeeded. So in short, I think it's something that's going to continue on in the future. So my apologies if I did go over the 4-minute limit, but sorry, you're making me wait for my supper, so I'm not going to feel too bad about it. But anyways, I look forward to listening to the rest of what you've accomplished this year and the plans for next year. So thank you very much.
Thank you, Sean. That was an amazing presentation. Now I will pass it on to the current Quaff management team.
Thank you, Peter and Sean, for your words. And thank you, everyone, for taking time out of your busy schedules to attend our annual general meeting tonight. We begin with a land acknowledgement statement, which is an institutional recognition of the traditional inhabitants on the land on which Queen's University is located. To acknowledge this traditional territory is to recognize its longer history, one predicating on the establishment of the earliest European colonies. It is also to acknowledge this territory's significance for the people who lived and continue to live upon it, and whose practices and spiritualities were tied to the land and continue to develop in relation to the territory and its other inhabitants today. We acknowledge that Queen's University is situated on traditional Anishinaabe and Haudenosaunee territory. We are grateful to live, learn, and play on these lands. And now I'm thrilled to pass it over to Nathaniel, current CEO of Quaff.
Hi, everyone. Thank you so much for being here tonight. My name is Nathaniel, and I'm Quaff's current CEO. Since our fiscal year started April of last year, we have nothing but good news to share with you. To start off, our fund has had its best fiscal year performance in its history, and as a result, our AUM has surpassed $600,000 for the first time. We have expanded our talent pool to recruit from all graduate level programs in the Smith School of Business and have started to explore the other alternative asset classes. In the next 40 minutes, my team and I are excited to share with you all of our successes in this past year, the challenges we faced, and the path forward as we hand the reins of managing this program to the next group. Next slide, please. Queen's University Alternative Asset Fund, or QUAAF for short, is an educational program run out of the Smith School of Business. Spread across Toronto, Kingston, and Beijing, our structure allows students to capitalize on the investment performance of seasoned experts and build relationships with industry leaders, and in doing maintaining consistent returns. QUAAF's initial capital, endowed to the school by generous donors, has historically been deployed into leading hedge funds in Canada, what we call the externally managed portfolio. Recently, we have added several internally managed portfolios, such as the thematic investing, sustainable investing, global macro, and rates. Graduate level students operate QUAAF with the structure and discipline similar to any other top asset manager on Bay Street. Each generation of QUAAF members is responsible for ensuring sustainable operations and financial stewardship of the fund. QUAAF remains true to its core values and objectives, which include education, fund performance, professionalism, and integrity. Students are recruited as analysts at the beginning of their program and go through a rigorous training process, which ensures they are ready to continuously research, evaluate investment ideas, and monitor all current and prospective investments. After their first term, selected analysts are promoted to portfolio manager or directors in the non-investment divisions and eligible for consideration as management. Management, with guidance from the board of directors, structure the fund's investment goals, defines responsibilities, target returns and risk thresholds, and reflects in the investment policy statement. Next slide, please. As mentioned before, I am proud to say that QUAAF now recruits from every graduate level program from the business school. This not only allows us to take advantage of the unique skill set of programs, which add a broad diversity of age, culture, knowledge, geography, and interest, making possible to consider a larger range of hypotheses during our investment decisions, enabling us to tap into the diversity inherent in the school. Next slide, please. I would like to introduce my fantastic team that made all this possible during this very challenging year. Thank you. I would also like to thank all our current and past board of directors, management, and team members that paved the way for us to accomplish these great results. Now I'll pass it to Brenna, our Chief Investment Officer, and the investment team who will take us through details of our portfolio.
Thank you, Nathaniel. Hello again, everyone. My name is Brenna, current CIO of Quaff. Before I get started, I would like to introduce and thank the investment management team from the first half of the fiscal year. Together, under Gabriel's leadership, the investment team built a very strong foundation for us. Thanks to their strong leadership, training, and mentorship, we were able to hit the ground running in the second half of the fiscal year. Before we discuss detailed performance of Quaff's investments, I would like to take this opportunity to thank everyone in Quaff for the incredible work and contributions towards our group's successes. It is an honor to work beside such amazing and driven professionals who have stepped up over the past year. To the many incredibly talented individuals who've been a part of creating the new training program for analysts, to all of the people in Quaff's many teams who have continually collaborated to become like a tight-knit family they know they can always rely on, to the people who are challenging all of us to be better and think outside the box, to the people who are both here in Canada and all the way across the world that we have yet to meet. Thank you to each and every one of you for your continued motivation, dedication, and dedication to Quaff. We would not be here without you, so thank you. As Nathaniel alluded to, our primary purpose is to provide Smith School of Business graduate students with educational opportunities within a practitioner setting to enhance their knowledge of alternative asset investment strategies, opportunities, and management. As such, preserving the real purchasing power of the asset base is of high importance. To do this, we utilize multiple portfolio strategies and combine both internally and externally managed mandates to create a holistic investment profile that is designed to provide positive investment returns in spite of prevailing market conditions over the full business cycle. The investment process for both internal and external mandates is quite similar, and this is a process that has been refined and expanded since Quaff was founded. I would like to take this opportunity to highlight the incredible collaboration and teamwork that takes place within Quaff, specifically between the investment, economic, data, risk, and sustainable teams. It is during this process that students apply the knowledge, skills, and expertise learned in their programs, and is enhanced by the cross-functional collaboration between and within these groups in Quaff. Our internal mandates include thematic growth, global macro, sustainable, and REITs, while external mandates include market neutral and growth. This year, a number of strategies realized gains that surpassed their respective return goals, contributing to our landmark success in the past fiscal year. Our exited positions have resulted in the fiscal year end cash at an atypically high position. This will allow us to execute on new holding proposals that are currently in the pipeline, which will be described later in our presentation. Moving into the strategic positioning of the fund, our externally managed funds have performed very well, and we have been thrilled with the success in these investments. Staying true to our goal of capital preservation, due to the high level of market uncertainty at the beginning of the fiscal year, our exposure to market neutral had never been higher. We highlight our external partners here and want to take this moment to thank them again for their continuing partnership with our fund. We know that having expertise in every area of the alternative investment landscape is not realistic. As such, Quaff is able to utilize external third-party managers with a proven track record to add diversity to the investment strategy. These portfolios often utilize niche spaces and require skill to properly execute. As Quaff grows in reputation, prestige, and AUM, in keeping with our goal to provide graduate students with educational opportunities, we are pivoting towards having more funds internally managed by our students. As such, as seen in the chart, the current allocation in the external mandates have been gradually decreasing over the past fiscal year, and this strategic goal will be continuing in this trend. As mentioned, Quaff manages 4 proprietary internal investment mandates, which are designed around the core competencies of the portfolio management teams. These portfolios allow Quaff to manage all aspects of the investment strategies in a way that will complement the other portfolios in our fund. This leads us to the landmark year that Quaff has experienced, beginning the year with a market value of $480,000 and ending our fiscal year in March of 2021 at around $604,000. This represents a 12-month return of 27.7%, which outperformed our primary benchmark, which returned 23.8%. We have made a number of new investments in the internally designed portfolio themes, such as telehealth, fintech, and biotech, which Thematic portfolio manager Cameron Day will discuss in more depth shortly. In addition, we are thrilled to have made our first sustainable investment in Warta, which is an achievement that was led by Jaime Espinoza and the sustainable investment team. These strategic moves, along with the continued successes in our other holdings, contributed to the 13% 12-month return in market neutral, 54% 12-month return in growth, and 40% 6-month return in thematic. The market neutral portfolio strategy is designed to invest with managers who provide consistent returns through pursuing strategies that together have little or no correlation to the market or asset class. The growth portfolio strategy is designed to capture the upside movement for investment strategies and asset classes. We are very proud to highlight the HGC funds, Lumen Asset Management, Dynamic Global Growth for their contributions to Quaff's overall returns in the last year. Finally, at this moment, I would like to thank the board of directors, the alumni, our predecessors for continuing to be involved and provide us with so much support, mentorship, and insights. And now I'm thrilled to pass the mic to Cameron Day, who will take us through the successes of Thematic.
Thank you so much, Brenna. Good evening. My name is Cameron Day, and I have the privilege of being the portfolio manager for Thematic Growth Portfolio. Quaff's thematic growth portfolio implements a thematic investment strategy, which utilizes a top-down approach to capitalize on timely market themes and macro investment trends. The past year for thematic has been very positive as we experience strong investment returns and have increasingly become larger contributors to Quaff's overall portfolio. In 2020, we initiated thematic investments in telemedicine, fintech, and biotech, and we took profits on nearly all of our fintech and telemedicine holdings, which realized a holding period return of 70.9 and 132.4% respectively. COVID-19 accelerated the adoption of technologies across a number of industries, and we were able to capitalize on this through our investments in the fintech and telemedicine sectors. The decision to exit these positions was due to share prices exceeding our price targets and profit taking. We continue to hold positions in telemedicine, fintech, and biotech sectors, and while there has been a broader sell-off in equity markets this year, we've maintained close attention to our holdings and remain confident in their outlook. Moving into 2021, there's been some structural changes to the thematic team. The team has grown from a total of 7 to 15 members, and our allocation of investable capital has increased from 5% of Quaff's AUM to 20, or about $120,000. Due to the successes we experienced in 2020 from implementing a basket approach to our thematic investments, we're excited to be refining this into our core strategy to capture investments in market themes. It is our belief that this will result in broader exposure to these investment themes with more diversification and the ability to deploy more capital. Our investment process has also become increasingly more collaborative with other teams within Quaff, and we incorporate assessments from the economic, risk, sustainability, and data teams to optimize our investment selections. We already have a robust pipeline of investment themes, which include e-commerce, AI, cybersecurity, and cloud computing, lithium and other rare earth metals, disruptive food technologies, and 5G wireless technology. The thematic team is excited for 2021, and we plan to build upon the successes that we realized in 2020. And now I'll pass things over to my colleague, Michael.
Thanks, Cameron. My name is Michael, and I will be introducing the global macro portfolio. So in the global macro portfolio, we seek to provide beta exposure to the fund through investment in international markets, both developed and developing, where performance is posed to outperform expectations on a risk-adjusted basis. In terms of our strategy, we focus on macro level trends in specific regions or countries around the world. Now, in the past year, we have focused on Asia's recovery from the pandemic, and have worked with our macroeconomics team to complete research and analysis on ETFs that would increase our exposure to that region. We've also contributed to the research of the thematic portfolio, particularly in themes that have been thriving in Asia, such as electric vehicles, semiconductors, and live streaming. It has been a great learning experience for our team, and we look to deploy capital and bring our investment ideas into reality within the next year. With that said, I'll pass it on to Jaime for sustainable investing.
Thank you, Michael. Hello, this is Jaime. I'm the head of sustainable investing team. Sean has already presented a strong case for sustainable finance, but I'll provide just another example of the momentum that we're seeing these days. As of last month, 73 asset managers representing 32 trillion in AUM have committed to have a net zero portfolio by 2050. Through the Net Zero Asset Managers Initiative. This represents roughly 20% of the global identifiable AUM, and clearly another sign of the clear movements that we see these days towards sustainability. So with that in mind, we launched this team to help Quaff achieve two things. First, include ESG factors in the decision-making process for all portfolios and pitches, and manage a sustainability-linked portfolio. So placing us in terms of our strategy along the sustainable investing spectrum, we're definitely not exclusionary, and we're also not impact investors. We're out there to generate alpha for Quaff and meaningful experiences for our team members. So in terms of our achievements made possible by our team, we launched the first proprietary rating framework for Quaff, to rate individual companies based on their ESG exposure, which has been implemented in 7 companies from industries spanning from electric vehicles to e-commerce. And ultimately, the objective of that framework is to decipher how ESG factors could affect the company's financials through a combination of both quantitative and qualitative factors. In terms of next steps for ESG integration, one of our priorities is to and work closely with the Queen's University Investment Services so that we become fully aligned on the ESG policies put forward by the university. And on the side of investment management, we're very happy to have initiated a 15K position into the Warta Alternative ESG Funds, which is a long-short equity fund that integrates sustainability explicitly into the investment strategy of the hedge funds, and it is managed by Warta Capital Advisors. We initiated this position in February of this year, and we very much look forward to nurture this relationship with Warta. And lastly, we also led a pitch into a leading provider of solar tracker systems for photovoltaic panels. As it is our opinion that solar PV is one of those winners from the energy transition, and complementary technologies are set for success. So I'm very grateful for other contributions from our team, and definitely look forward to continue to see this team grow and add value to Quaff. That in mind, I will pass it on now to our CRO, Nicole.
Thank you, Jaime. Hello, my name is Nicole Hong, and I have been privileged to work as Chief Risk Officer over the past fiscal year. I will discuss the objectives and strategies, accomplishments that our team has made throughout this term, and walk you through the summary of risk position in Quaff portfolio in the end. So these attractive people are the members who have been instrumental to the success of the risk team over the last year. The risk has grown from 3 members to 10 diverse functional members. Our team has also gradually grown not only in number, but also in granularity and additional quality of risk service that we provide. Without these people, there could not have been the accomplishment to celebrate, so I want to express my warm and fused gratitude to them. Our objectives has been optimizing the position sizing of portfolio and setting the portfolio risk tolerance for the existing portfolio and new potential investments, which started with the strategic plan of taking the 3 main steps, such as standardizing the current and new risk procedures, developing models to make more data-driven decisions and to provide more in-depth risk analysis by doing so, and reaching out to other teams proactively to form partnership and to create collaborative projects together. This step is for taking pedagogical approach for continuous learning and for improving overall portfolio strategies and functions. Throughout the term, the risk has operated in the 3 main pillars under the risk management framework, which consists of measurement, monitoring, and management control. Our main tasks were performing the risk due diligence and assessment on the existing holdings on the Quaff portfolio. The activities of this task were categorized within each pillar of the risk management framework, which starts from measurement process that includes the collection of data and information and major assessment and quantitative analysis. The measurement is then followed by monitoring process, which ensures the IPS compliance, review of our analysis, and process along with the comparative analysis. The management and control process function as a baseline process for measurement and monitoring, which ensures the risk models and matrix and identifies like comparable funds and other portfolio, while our portfolio baseline, our portfolio database is maintained. These functions within the risk framework were executed repeatedly in iterative cycle, where each process gets improved in quality and accuracy through frequent monitoring process by reflecting review and feedback. The aim for having the risk management framework in place was to create the building blocks of the risk universe and risk appetite, where the risk universe serves the access to the risk condition external to the Quaff portfolio, and risk appetite defines a risk environment internal to the Quaff portfolio. Our team is still in the process of building both the risk universe and risk appetite, which will provide a path to achieving our main objective and to strategically allow us to reduce the total risk in Quaff portfolio once they are completely mapped. I would like to briefly touch base on what our team has accomplished this term. I have broken down to 3 main areas, which are team building, risk management, and risk analytics. In a nutshell, our team has set up the strong baseline for the next milestone to be achieved during this term. The team building was important initiatives at the start of the term. As initially small group, the work was individual based rather than the team based. To be more sophisticated functional team, I established the connection and collaboration within the team by having regular admin, strategy, and working session meetings, and try to create the risk learning platform to educate one another within the team. The frequent trainings and peer reviews were provided within the team, and we established the tracking system based on the agile project approach. As for the risk management, our team followed the risk framework model that was described in the previous slide. The main accomplishment was the consolidation and aggregation of QUAAF data in one place, which were scattered in several platforms before. Based on that baseline, our team built new risk matrix as well as visualizations to add more quality and storytelling piece to the risk due diligence process. We have also standardized the risk task process and documented them in a process manual that will be accessible to new joining members and members starting fresh in the upcoming term. Our team has also continued on the risk analytics work that was passed on from the previous team. We were then able to consolidate our multiple analytics platforms to one analytics platform, which is Python. Based on the progress that's made in the current term, the future direction for the risk team in the upcoming term would be establishing a strong learning platform and talent acquisition, the comprehensive risk management tool package, and position sizing optimization after cleaning our existing risk models, and introduction of the risk predictive models in the risk analytics. Moving on to the brief overview of the risk analysis on the QUAAF portfolio. When looking at the correlation of QUAAF portfolio along with a subdivision portfolio of growth and market neutral, all portfolios were positively correlated over 5 years of holding periods overall, moving in the same direction as the benchmark indices. The QUAAF portfolio's 1-year annualized return and standard deviations were also compared with the number of benchmark indices that are comparable to the growth, market neutral, and thematic portfolio held within the QUAAF portfolio. The QUAAF annualized return was higher than the overall benchmark indices, but a little lower than S&P 500 total return. The QUAAF standard deviation was lower than S&P TSX Composite Index and S&P 500 Index, but higher than Hedge Fund Index Fund of Fund and FTSE TMX Index, showing the volatility less than the market and the range acceptable within the risk compliance scope per IPS. The QUAAF Sharpe ratio, which is a risk-adjusted return based on the return and standard deviation, showed relatively higher than the Sharpe ratio for the benchmark indices, displaying the robust earning potential throughout the year. This concludes the presentation from risk, and I will now hand over to Brandon for reporting the data team's success throughout this term.
Thank you, Nicole. Well, hello, everyone. My name is Brandon Touchon, and for the past 9 months, I've had the privilege of serving as QUAAF's first and principal data scientist and CDO. So before I get started, I'd first like to acknowledge my wonderful team I've had over this time period. And if any of them are on this call, I really want to thank them for putting up with everything we've been through the past year. Data is a brand new team at QUAAF, and as with any startup, growing pains can be abundant. So all of these wonderful people here have really transformed what started out as a 2-person internal consulting team into a fully fledged wing of QUAAF, and I'm eternally grateful for their effort in that sense. So what does data do, and what is data's role at QUAAF? Essentially, data was built with the mandate of improving 3 things. We wanted to improve our investments, we wanted to improve our infrastructure, and we wanted to do a lot of educational support. So to begin, on the investment side, all of QUAAF's thematic and global macro investments now incorporate machine learning share price forecasts, which is a fantastic development. They've allowed us to add a 3rd dimension to all of our investments. So before we had our traditional thematic and our risk, now we have econs inputs are put into machine learning models, and we're really building out a quantamental approach to all the investments we've made going forward. Data obviously provides the quant instead of quantamental. On top of that, as Cameron touched on with Thematic, we've been doing a lot of quantitative optimization as of late, and we've really moved past individual equity purchases in favor of financially engineered baskets, which are essentially constructed to optimize our exposure, get us the risk tolerance we like, and ideally generate the returns we want. The results here have been fantastic, as Cam touched on earlier. We've made up to 5 thus far, And we've essentially been able to replace ETFs in the bulk of our portfolio and have started building them in-house, producing superior returns and far superior educational value for our analysts, because we're essentially recreating famous ETFs and positions in-house. On the infrastructure side, we've done a fantastic amount automating many of Quaff's day-to-day operations. So whereas in the past, we'd have a considerable amount of work done by our analysts on things like portfolio tracking, portfolio reporting, just returns, basic risk metrics, those have now been fully automated using some of the most cutting-edge analytics and data science software available. And this has been a twofold benefit. First off, we've saved a considerable amount of hours across the fund, which can be put on more strategic efforts. And we've also provided a lot of education for everyone in this room. So for all the hedge fund managers listening, I know you have these exact processes at your fund and you might want to move those forward. I can recommend you to about 10 people who can definitely help you with that. That moves me to my third point, education. And as we become more diverse and finance has become more technically involved, technical training has become a real pillar of Quaff. So in this sense, Data's main mandate when it was started was to provide training on data science, analytics, software, coding, financial engineering, pretty much the gamut of modern 21st century finance, to fund members, the broader Queen's community, and even those outside of the fund. In this sense, the response has been fantastic, particularly among Smith's new analytics ecosystem. We've gotten a record number of applicants, both for my team and of Quaff. We've got a tremendous amount of turnout to our open learning sessions, and we've been able to provide all of this both to Queen's proper, the entire fund, and pretty much the entire student ecosystem through the power of open source, which is something we're very proud of. So moving on, highlighting some of our achievements over the past 9 months in the lifetime of the Data team. We've given 8 of these training sessions, as I've touched on, and we've had 400 plus attendees, which has been fantastic. And bear with me here that these are not the most exciting training sessions sometimes. I don't know how many people you can get to show up to your standard financial engineering 101, but the turnout we've had has been outstanding. We've got so much feedback. I've even gotten about 200 people to essentially perform a take-home assignment that wasn't for grades or money, so I'm very happy about that. On the investment side, we've invested in 5 baskets as of last weekend, actually, and we've realized tremendous returns on all of them. FinTech was our very first and our flagship. Essentially, the idea was to outperform Cathie Wood's famous ARC FinTech ETF. And over the holding period that we held it and realized our gain, we actually accomplished that with a gain of 70.9% over 55.3. So we're extremely happy about that. And it's essentially just been a great way to bring every team at Quaff together and get everyone out of their silos through the power of technology. And then on the in-house analytics side, we built 3 tools to help with our research. This is all available through open source on our Quaff's GitHub. It's all quite easy to use, simple, and it's a great training exercise for our developers and analysts. In this sense, we've built tools for derivatives pricing to basically shush out how Street views volatility of equities and use that in our pricing models. The aforementioned portfolio tracking software and some research tools, essentially data mining SEC 13F filings, with the goal being to recreate or at least learn from some of the famous hedge fund strategies of the world. So your Citadels, your Renaissances, your D.E. Shaws of the world. The next 12 months, the future is very bright for Data. As I said, it's grown from a 2-person operation to a fully fledged team of 10. And with that added horsepower and added formality, we're looking to essentially go live with our new fully automated fund tracking, reporting, analytics. I'm extremely happy and proud to say that as of tonight, that's all actually ready to go and go live. In the next month or 2, our board members and fund supporters can look forward to a live, accessible dashboard with everything that's going on in our fund that they can check into at their leisure. We want to really expand some of our quant practices and some of our ML forecasting to some of our hedge fund teams. And what I mean by this is we're looking to essentially reevaluate how we evaluate some hedge fund managers, some portfolio managers, and continue to be more quantamental across the fund. And then finally, we really want to continue to develop those research tools. We want to stay on the cutting edge of data and insights. And we want to continue to grow our quantitative investment capabilities, both from an educational standpoint and also just to grow the fund as a whole. And with that, I thank you for your time, and I'll pass it over to John, who will be speaking on behalf of Econ.
Thank you, Brandon. As Brandon said, my name is John, and I'm the Chief Strategy Officer here at Quaff, and this is my economic team. Sorry to disagree with you, Nicole, but I think we've got the most handsome bunch. My team and I keep our ears to the ground to research emerging economic trends, as well as changing conditions within our regions and industries. Currently, we are primarily focused on the North American equities and fixed income, energy, and commodities, but we are looking to build out our global and emerging market knowledge base. In the last year, we have pivoted to using a more research-focused and data-driven product. We analyze both qualitative and quantitative findings to shape our opinions, which we then present to QUAAF team meetings and organized outlooks. Like with everything in QUAAF, it is an iterative process, and we look forward to performing detailed lookbacks on this process to identify gaps and improve further. Our goals for the next year are to continue to grow the team and expand our knowledge while providing topical and timely insight to QUAAF along the entire investment process from idea generation to performance evaluation. Economically speaking, last year for QUAAF's performance has largely been defined by the market recovery from the COVID-19 pandemic. Winners have been the tech market, the housing market, the ESG-focused energy, cannabis, to name just a few. This is largely driven by government stimulus, Federal Reserve quantitative easing, low interest rates, and the like. Looking forward to the next year, we see that these trends will continue. With the vaccine rollout, Canada continues to lag the US, and we think that we will see that continue into the equities as well. The demand has materially been impacted by subsequent lockdowns and the stopping and starting of reopening the economy. We do have some inflation worries driven by the stimulus spending that we've seen. However, we do see this as a short-term worry because while the spending has occurred, it hasn't impacted the real wages for the employed, and therefore the inflation should be short-term and not continue going forward. Looking at some economic predictions into some industries and regions we're looking at, for US, we see a continued rise on the back of rising market sentiment. Interesting to note that currently we still haven't gotten a market sentiment that is equal to what we saw before the pandemic, so there's a lot of juice there. And 95% of the S&P stocks, 50-day moving averages, have traded above their 95% 200-day moving averages. The last 3 times we saw this from a technical analysis perspective, we saw a bull market of 6 months and 12 months after this fact. Pivoting from North America to look at the Eurozone, we have we predict that the relative expected growth in valuations in the Europe region will appreciate compared to the US. This is because while they seem to have a earnings growth discount compared to the US on their economy, while they vaccinate and that campaign continues rolling on, we think that that will discontinue and we'll see a appreciative growth between the two regions. Looking over towards China, we see prior year stimulus has led to lofty/frothy valuations in their equities. Evidence suggests that these valuations are vulnerable to any policy support pullbacks that we might see. So this is a risk that we need to keep an eye on. Lastly, we'd like to look at energy and commodities. And as Sean alluded to earlier on, and as Jaime alluded to earlier on as well, long-term ESG impacts limit the upside to most fossil fuels, but drive potential growth in the electricity and electrification regions. Alternative energy is on the rise, and taking into account the baseload retirements in the US and the growth in the renewables sector, we see an excellent opportunity for QUAAF to invest in going forward. Additionally, as also Jaime had mentioned before, we do see the big winner here to be utility-sized solar panels as they grow from a 16% threshold to almost 50% threshold in the latest EIA Energy Outlook for 2021. And I would like to say this outlook was published prior to Biden's win, so his plans for a net carbon neutral electricity grid by 2035, as well as a net neutral carbon economy by 2050 are not impacted in this projection, so it's a lot higher, or it should be a lot faster than that. Looking at the petrochemical industries, OPEC Plus will continue to balance the market, and Canada has entered a regulatory certainty with the carbon tax passing the Supreme Court. Lastly, looking at commodities, we are currently experiencing a bull run that will be exacerbated by the $1.9 trillion stimulus package passing through the US. However, while we do see that this is a very optimistic view of the commodity prices, we are a little bit more reserved when it comes to a super cycle, as for a couple commodities such as gold and palladium have not performed quite the same in the last prior year. Though there are other economic reasons for that, we just are a little less bullish on commodities. And with that, I'd like to hand it off to Gina to take us through the next portion of our presentation.
Thanks, John. Hi, everyone. First, I would like to introduce the operation team. My name is Dina. I'm the current Chief Operation Officer. Next to me is Diu, Chief of Staff. We lead operation team together. I'm proud to work with such a fantastic group of talents, and I would like to express my appreciation to my team. Thank you, everyone. Next, I'll go through our achievement in the past year. Thanks to the previous cohort led by Abby, we launched a brand new website with a newly designed UI. We have created a comprehensive communication channel on Slack for daily news, learning articles, job opportunities, and team group chats. Also, we got all the documents sorted and organized on Teams and built up mini wiki sessions for each group as a menu book for the future cohorts. On the marketing side, our LinkedIn page reached 1,000 followers and continuously growing with informative posts. We successfully interviewed several alumni for Quaff's podcast channels. Bi-weekly, we have financial industry leaders come to our Speak series to have an insightful discussion regarding to the current market, industry, and career advancement. Last but not least, we successfully held the first case competition on Robinhood IPO. The presentation of the top team have posted on our YouTube channel. Please feel free to watch it. To get a better understanding of our Quaff branding, on the top left is our revamped website aligned with the new look. The image below is our LinkedIn page, which currently has 1,069 followers. On the right-hand side is the Quaff Spotify podcast channel, which currently features Sean Choi, Anfing grad, and Will Wong, MBA grad. If you haven't listened to these podcasts, I would highly recommend you check them out and get inspired by their story and experience. Next is a peek of our featured guest speaker from our bi-weekly industry Speak series events. We are very honored and lucky to have all of them spending time with us and inspire us with insightful thoughts, story, and advice. Here, I want to thank you all again on behalf of all the Quaff members. We hold the most significant event, Quaff Annual Summit, on November 23rd last year. Quaff is thrilled to bring together 3 heavy hitters to discuss private equity, real estate, and venture capital for the Quaff Summit event. We have successfully promoted in all the programs through different channels and successfully attract over 150 attendees, 50 Quaff alumni among 5 universities. Quaff is a great learning and practicing platform for Smith students. Thanks to previous cohort and our talented members, we share many offline learning material and successfully hosted online training session for all the Quaff members. On the slide is some selected topics from Quaff's curriculum, such as hedge fund analysis, fund management, evolutions, due diligence process, and etc. With excellent education and network from Smith and Quaff, we are very proud to see our members getting new job opportunities in different financial industries. Meanwhile, we are pleased to have such a strong alumni network. It is a really great asset to Quaff. By leveraging our strong alumni network, Quaff launched mentorship program last year. And here just listed some of our current mentors' background. They are all playing significant role in big banks or financial companies. I want to thank all of our alumni mentors for sharing and helping current cohorts to grow. Now, I'd like to tell all of you about some of our upcoming planned initiatives. As gaining the success of the first competition and positive feedback, we will continue hosting the case competition quarterly to facilitate learning and intern networking. With the new normal of remote work, we will elaborating Quaff branding through YouTube video and weekly newsletters. To subscribe our weekly newsletter, you can scan the QR code and to sign up. Furthermore, we will continue to increase networking opportunity through Speak series events and crossover events from our partnerships. Also, we will continue the mentorship program to enhance connections with alumni. Our annual report is slated to be published in the coming weeks, so please watch out for that. I want to close off by saying that the operation teams looks forward to all this is in store for the 2021 and 2022 fiscal year and remains passionately dedicated as your steward of learning and development, event hosting, and relationship building. Now, I'd like to invite Robert Davis, our upcoming CEO, to give us an outlook of the next fiscal year.
Thank you very much, Dina. I'm also excited to also introduce the rest of the incoming management team, many of whom you have already heard speak today. We have Brenna Cunnington as the Chief Investment Officer, Hao-Yan Yu as the Chief Operating Officer, Adam Riyad as the Chief Risk Officer, and John Irvin as the Chief Strategy Officer. As we look ahead to the future of Quaff, we are targeting several initiatives. One of our primary goals is to expand our AUM over the next 2 years to $1 million. This will be accomplished through both investment returns and by soliciting contributions from Quaff alumni. Within our portfolios, we are looking to increase our diversification across asset classes, geographies, and markets. Within education, we're planning to further develop our data-driven investment approach, develop Quaff training materials, and increase our reach to students across further Queen's programs. Finally, within branding, we're looking to continue to raise the profile of Quaff, both domestically and internationally. The strength of our board, our advisors, the leadership group, and the incredible talent we have within our teams gives us a great deal of confidence on our ability to execute, and we're really excited for the year ahead. And with that, I would like to thank you very much for joining us tonight, and I will hand it back to Hao-Yan, who will be moderating our question period. Thank you.
Thank you everyone for attending the AGM tonight. You can scan the QR code on the screen to subscribe to our weekly newsletter if you want to receive more updates about Quaff in the future. Also, follow us on LinkedIn if you want to know more about our current and future activities. Now I will start the Q&A session. If you have any questions, please submit them through the chat box or feel free to raise your hand. Okay, go ahead, Patrick.
Wonderful presentation, everybody, and good to see everyone. I'm the Executive Director of Finance at Smith, and thank you for inviting me to participate in this event. I had a question for Brandon, and it struck me when you were going through your 8 training sessions and 400 plus attendees. And I was thinking, is there an opportunity for those, or maybe you do already, to have our undergraduates also participate in those training opportunities and get some of those skills, that if you've thought of that, or if there'd be an opportunity to do that?
Yeah, absolutely. So first off, all the lessons have been recorded, and like the code scripts, the teaching materials are all available on our website through open source. But in terms of partnerships with the undergrads, we've been working on a partnership with Quant, which is the undergrad quantitative investment club, and we've been trying to expand it there. But in terms of direct partnership with Queen's undergrad, nothing yet. We've started a little bit of inroads just with the MFin specifically, trying to teach them how to code some of the analytics stuff, but we'd be delighted to kind of expand that to anyone and everyone. And as I've said before, it's pretty much good to go scalable for any interest there. So I'm delighted to talk more about that.
That'd be fantastic. Thank you.
Okay, next question from Samuel Taiwo. He's an incoming MFin 2021. He's asking, how do I join Quaff? Maybe Dina, you can elaborate on that.
Oh, thank you for the question. So if you're really interested to join Quaff, you can wait for our info section holding in your program, and then during the info section, you are able to talk to us, asking the question, and we can start it from there.
Next question from Shitanshu Mati is for Brandon, data team. What are the immediate challenges does your team foresee?
Yeah, for sure. So I guess the biggest one when we started out was making sure something was sustainable. but we've been fortunate enough to bring on some outstanding people, one of which is our new CEO, Rob. So I'm very grateful for him. But the hardest thing past couple months has been knowledge transfer, getting everyone on board with how to run all of our software, how to do everything we do, and how to, most importantly, interpret the results. So internally, that's the biggest thing. And then strictly on the quant side, there's been a lot of volatility in the markets as of late, specifically tech markets. We saw the dramatic pullback with fintech actually just after we got out of that basket. So the inherent volatility in the market does make our models somewhat more inaccurate. And we've been working on essentially a better way to forecast to account for more variation in the market, larger holding periods, things like that. So in a nutshell, succession, training, education, keeping things going, scaling up from a startup to a fully fledged team. And then technically it's simply just making our models more robust and more attuned to handle volatility in the marketplace.
Thank you, Brandon. Any more questions? Oh, there's one question from James Buren. What are you doing in the area of crypto? We had some crypto expert. Michael, do you want to answer this question?
So we actually, a couple of us have class right now, and so some people had to drop off right after their part. But yes, crypto is definitely a really interesting area that we're looking into. It sounds like Corey might be able to speak on this. Corey, are you able to talk a little bit about this?
Yeah, thank you, Brenna, and thank you for the question. As everyone has been able to see by looking at any major headline, that crypto is really a space that is seeing constant investment. It's now evolved past just the thing in the background that no one wants to talk about to something that's being accepted by major institutions such as JP Morgan and being recommended. So we are investigating the possibility of adding it into a portfolio with a small rating to ensure and have it as a correlation to the market as an effective hedge. And we'll continue to investigate to see how the large cap cryptocurrencies evolve and its potential uses within the overall Quaff portfolio.
Okay, we are running about 5 minutes over. So if anyone has a question, we can allow for one more question. If not, I will end it for today. Okay, seems like no questions. Thank you, everyone. Thank you all again for joining us tonight. Don't forget to follow us on the QR code and on LinkedIn page. Thank you, everyone, for the amazing presentation today. If you still have questions to us, feel free to drop them in the email on the screen. We look forward to working with and for our organization in the coming year. Thank you and good night, everyone.